Greetings again, guys. Well, it's 8:30, and believe it or not, this is actually the third video of the day, even though this is the second one you're going to see, because the other one's already recorded, and it was going to go up here in a minute, but this one is breaking news, and something we all need to pay attention to. CPI numbers, Consumer Price Index, just came out, and I know what y'all are going to say. This is not real, but these are the official numbers, all right? Now, mind you, I want you to understand this. Inflation numbers by the government do not include food and gas, food and energy, electricity, anything like that, your groceries, okay? So add those in afterwards. Remember good old Potato Joe's greatest economy ever? Well, inflation just hit 8.6% year over year. Economists expected 8.3. This is worse than March, where we were at the highest in 40 years. We are now at the highest inflation since 1981. There is no sign of this stopping. We won't know June numbers until 10th of July, somewhere thereabouts. You can pretty much bet, guys, that we are in a recession. Okay, there's no question. The official definition of what a recession is 2 quarters of negative GDP. Well, first quarter was negative GDP. You can pretty much bet the way that inflation is running rampant here that we are going to have another negative quarter. So, how is this affecting everything? The stock market's going to get hammered again today. It was down 600 and some odd. Dow was down 600 and some odd points yesterday because people were worried. Futures at 8:30 were down 250, 260, something like that. Who knows where it's going to go here? You may have program buying go in, because the algorithms, everybody's favorite word, will say, oh, this is a good place to buy, and the computers will just start buying stuff. That's the only thing holding the stock market afloat right now is the algorithms are running the show, not the greatest computer ever built. But so this is what we have to look at. You add food and oil in there, okay? Fuel and energy into our CPI numbers. We are probably, and I'm going to guess at this, somewhere around 20% inflation, okay? If you go back to the Great Depression, inflation was running at about 25%. Back then, before the government changed the way the numbers were figured out I think it was in the 80s, maybe it was in the 90s, food and energy were included in the CPI numbers. So we are now at a higher inflation rate now without food and energy in than we were in 1981, where food and energy were included. I want you to think about that. If you remember back in the beginning of the Reagan term, we were just coming out of Jimmy Carter's fiasco, all right? Paul Volcker raised rates to nearly 20%, okay? Gee, I wonder what's going to happen with the Fed meeting in next month. There'd be a long shot. Gee, think they're going to raise rates again? They got to try to do something to cool down this inflation. Well, the reason for the inflation, my opinion again, has nothing to do with monetary policy. It has to do with government policy. The fact that we can't get product, that there isn't any product, is what's causing inflation. The stimmies have been gone for a year. That's what started all this. The problem is we still don't have a supply chain that is working. So remember what causes inflation? Too much money for not enough product. So what do? They try to they try to raise interest rates so people aren't buying as much on credit. That doesn't fix this. That doesn't fix the fact that we don't have the product to buy. The food, the oil, the cotton, the I mean, pick something. Talked about this morning on cotton prices, things like that. This is sorry, somebody going by on a four-wheeler. This is what's going to. Inflation is not going away. The Fed can't do anything. The Fed could raise rates 5 points right now, and it wouldn't do anything. I mean, it would stop people from borrowing money, sure, okay, but it does not solve the problem. Is there isn't the product out there. You know, we all go to Walmart, we all go to the grocery store, and or Target or Tractor Supply or wherever, and they're short on everything. Okay, and I know there's always that troll in there that goes, I don't see any shortages in my store. You know, no, take the blinders off. Okay, sorry, but this is the problem. There isn't production, so there isn't product. That will cause inflation to keep going up. Eventually, what we get into here is stagflation. All right, we will be in a stagnant economy. When we raise the interest rate so high, nobody can afford to buy anything. And when I'm saying that, that's companies, because you and me are not, hopefully, not putting stuff on a credit card to go out and buy this stuff. But the companies need to borrow money to get more material, build something, and sell it. Okay, but if they can't afford to borrow the money, which of course then raises the prices to you and me, it compounds on itself. So if they're not making anything and the prices are too high, inflation continues to get worse and worse and worse and worse. This is a stagflationary environment. This is a recessionary environment. This is starting to look, like I said, if you take a look at real numbers and go into 20%, where the depression happened, how much money is in margin in the stock market? Okay, I talked about that once before. Something like $800 billion of stock is owned on margin. Okay, remember, margin rates go up too, and people have to pay the money that they pay the interest on the money they borrowed. So they want that stock to go up even higher just to pay the interest. When they can't, they sell out, and now selling causes the market to go down. I know this is getting wonky, all right? But this is what you need to take a look at, all right? When it's your savings, your retirement, the ability to buy something, you need to get it now. The prices are going to continue to go up. I mean, look at gas. Gas is up, what, 40 cents in the last week? What did I pay? $4.19 last weekend, and it was $4.59 today. Yeah, so 40 cents this week. All right. And remember, that number is not included in the CPI numbers. That's nearly 10% in my area, okay, in a week, not a month, all right? Anybody see gas prices coming down anytime soon? I mean, hell, what's Joe going to do? Release more from the Strategic Petroleum Reserve? That dropped prices, I think, 3 cents for a couple of days. Yip-de-doo-dah, okay? Guys, we could very feasibly be heading into another Great Depression. And it's not because of the Fed, even though the Fed is completely FUBAR, okay? It is specifically because of the policies of this administration. No oil, too much free money, too much equity crap, okay? Nobody has to go to work to pay their bills. The government will just pay them for you. We'll give you more food stamps. We'll do another rent moratorium. This is the stuff that's coming, okay? We'll delay payments on student loans again. They keep pushing this out. Eventually, the chickens come home to roost. Today's number was not good. That was a massive miss, okay? 8.3 to 8.6. You don't think, oh, that's not much. Yeah, that's big, guys. This is not going to end pretty. And when next month we're having a conversation at 8.8, 8.9, 9, okay, you start thinking about it, not including food and energy. Has your paycheck gone up 20% in the last year? 25%? It's a lot of freaking money. That's what it takes to buy today what you bought last year. Your standard of living has gone down 20%, guys. This is why we need to buy it now. Get whatever you can. Not on credit, all right? But find something. Get rid of the Netflix, get rid of the Hulu, and get food, get underwear, get ammunition, get something that is usable. Not We're past the point of entertainment value. We're now to the point of survival value.